Friends, gather round, for tonight we delve into the world of cryptocurrency, specifically the Pi network. This digital currency, once confined to the shadowy corners of your phone's app drawer, has finally flown the coop and entered the open market. On February 20th, 2025, Pi Network launched its open Mainnet. It was a momentous occasion, like when a koala bear finally leaves its mother's pouch, except instead of eucalyptus leaves, it's seeking the sweet nectar of financial legitimacy. This launch marked the end of Pi's enclosed Mainnet phase, a period of development that began back in the hazy days of 2021. Think of it like Pi's awkward teenage years, where it was figuring out its identity, experimenting with different blockchain haircuts, and trying to avoid being grounded by its parents, the Pi core team. But now, Pi is all grown up, ready to face the harsh realities of the open market, where only the fittest cryptocurrencies survive. The open Mainnet launch was met with a mixture of excitement and trepidation. Pi enthusiasts, who had been diligently mining Pi on their phones for years, rejoiced at the prospect of their digital efforts translating into tangible value. Others, however, remained skeptical, questioning the legitimacy of a cryptocurrency that had spent its formative years hidden from the scrutinizing eyes of the public. This launch wasn't just about letting Pi stretch its digital legs, it was about real-world use. The Pi network team envisions a future where Pi isn't just another speculative asset, but a currency used for everyday transactions. Think buying your morning coffee, paying your rent, or even purchasing a Tesla, all with Pi. Ambitious? Sure. But hey, every revolution starts with a dream, even if that dream involves a decentralized payment system built on the backs of millions of smartphone users. The moment Pi Network hit the open market, it was like a bucking bronco at a rodeo, with its price swinging wildly in all directions. Initially, it surged past the $1 mark, reaching a high of $2.10, as eager investors piled in, hoping to strike gold in the Wild West of cryptocurrency. But then came the inevitable correction. Within days, Pi's price plummeted by more than 15%, bottoming out at around 70 cents. It was a harsh reminder that the crypto market is not for the faint of heart. It's a volatile beast, driven by speculation, hype, and the occasional tweet from Elon Musk. Despite the roller coaster ride, Pi's trading volume skyrocketed by over 1,700% after its launch. This frenzy of activity, however, wasn't enough to prevent its market capitalization from taking a hit, falling to a still respectable $7.02 billion. Adding to the drama, the Pi IOU token, a sort of placeholder for Pi before the Mainnet launch, crashed spectacularly, losing 97% of its value within 24 hours. It was like finding out your winning lottery ticket was actually just a very convincing fake. Now, let's talk about the nitty-gritty Pi network's tokenomics. With a maximum supply of 100 billion Pi, the current circulating supply sits at a modest 9.7 billion, which doubled after the Mainnet launch. This means there's a whole lot of Pi still waiting to be mined, distributed, and potentially dumped onto the market. The allocation of Pi is a bit like a delicious pie, with 65% going to miners, the folks diligently tapping away on their phones, 10% earmarked for ecosystem growth, 5% for the liquidity pool, and the remaining 20% going to the Pi core team. However, before you can claim your hard-earned Pi and live out your cryptocurrency dreams, there's a rather significant hurdle: KYC verification. KYC, or Know Your Customer, is a process that requires users to verify their identity. This requirement has sparked controversy within the Pi community, with some praising it as a necessary step towards legitimacy, and others decrying it as an invasion of privacy. It's a classic dilemma in the world of cryptocurrency, balancing the desire for anonymity with the need for security and regulatory compliance. So, what does the future hold for Pi Network? Analysts are cautiously optimistic, like a zookeeper trying to coax a panda bear into mating. Pi's long-term success hinges on its ability to build real-world utility and gain widespread adoption. The Pi Network team is working hard to integrate Pi into everyday applications. Imagine a world where you can use Pi to buy groceries, pay for online services, or even book a flight. The possibilities, as they say, are endless. Over 80 community-built applications are already in development, showcasing the enthusiasm and creativity within the Pi ecosystem. Users can now transfer Pi to external wallets, and developers are free to build and deploy decentralized applications, or dApps, on the Pi blockchain. However, challenges remain. Future price stability is uncertain, especially with the potential influx of new Pi entering circulation. Exchange listings will play a crucial role in determining Pi's trading volume and overall market perception. Ultimately, whether Pi Network sinks or swims depends on its ability to convince both users and businesses that it's more than just another cryptocurrency, it's the future of decentralized finance.